Hi there and welcome again to Take 5, where we take 5 minutes to ask 2 key questions raised in our recent Overseas Investors webinar, which will be put to the relevant expert in each field. I'm your host, Stuart Mitchell, owner of Loan Market here in Queenstown, and today I'm joined by tax specialist, local, partner of Findex. How you doing, Dan?
How you going? Not too bad.
Good man, good man. Thanks for taking 5 to join us. Appreciate you busy.
Yeah, no, great to be here.
Good. So look, we're trying to keep this in 5 minutes, so I think we'll just fire straight into it.
Yep.
So what are my tax obligations in New Zealand and key considerations if I was to purchase property here right now?
Sure thing. So New Zealand luckily has a fairly simple tax system. We're quite fortunate that way. For example, we don't have capital gains tax, we don't have estate tax, we don't have stamp duty, for example. So it's quite an attractive outcome. But we do have to worry about income tax. So if we're buying property for some form of rental return, whether it be long term or like short term, which has been quite popular, you still have an income tax obligation that you have to comply with. So you'd have to file a tax return and pay tax on New Zealand rates. What some people sometimes get a bit confused by is they think that because they're returning their income from overseas, because they're a non-resident, they don't have to file here. That's not the case. They have to file tax returns in New Zealand. If they've got a good tax treaty country with New Zealand, then they should get a credit for that, but they do have that underlying obligation in New Zealand to pay that tax. Probably one of the other key aspects is getting that structure right. Because how that is owned, it dictates how the tax treatment applies to it, both here and also overseas. For instance, some countries, even though we've got tax treaties, we can end up with double tax still, just purely from a structural point of view. So it's really, again, that understood up front. And I think the other aspect with that is, while New Zealand doesn't have a capital gains tax, we still can tax land transactions in certain cases. So, for instance, one of the rules we have when you buy residential kind of land, which can also bring in our short-term rentals, is the bright line rule, which states that if you sell land within 5 years of acquiring it, it can be subject to tax. And so we don't want to move property around later, because we want to try and keep it set up, get it done the right way. And I think the other aspect we'll talk to our clients with is getting the end in mind. What's your long-term plan? How do you want this to be operated for a long time? And get that right up front, much easier.
Key up front, otherwise it could be costly.
It's a lot costlier, and you limit your options.
Okay then. Final question. GST, what is it and how does it actually apply to property here?
Sure thing. So GST is probably the area we get the most complication with our properties in New Zealand. And so GST, it's like VAT overseas. It's a value-added tax. It's a tax on goods and services. And so it can apply to property in certain cases. So generally speaking, residential rentals, they're exempt from GST, but your short-term rentals can be. And it's quite a significant consideration, because it does, actually could bring in 15% on top of your purchase price if you get it wrong. And so it's really, as a key point, whenever you're buying short-term rental, you want to get that advice up front, both in terms of who you're buying it from, because that can have an implication on it, but also what are your use going to be. Because not only, it might not be a case you might have to pay it, but you might be able to claim it, but then often with these properties, there's some sort of private use that can require adjustments. And again, with GST, how you own it dictates the treatment. And so again, it's getting it up front, so you don't get this hit with this 15% bill, which on $1 million, that's $150,000 you've got to find. The bank won't fund it, so you've got to get it right.
Great. Perfect, Dan. So that was a hell of a lot of information in 5 minutes. There's a lot of detail around tax and specifically GST here in New Zealand. So that was short and sweet for you. But if you do have further questions, Dan's details will be at the end of this video. And thank you very much for joining us again. In our next episode, we'll be joined by Richie Heat from Colliers International, real estate agent here locally in Queenstown, and he's got a couple of $1 million questions to answer. So we'll look forward to seeing you then. Thank you.